Good morning, everybody. Well, new all-time highs, closing new all-time highs. Okay. That was a tail, so it was an intraday new high back there. But I say, so what? As far as the Dow, because it's a wide, whippy trading range. It's not, like a bull market advance, right? I mean, this thing has kind of been in a somewhat of a trading range for quite a long time. Trading range here, up and down. We got up here, then between there and there, it was in a trading range. Then, we get a couple of weeks of bull market type of price action. And then we go back into mini bear market. Oh, let's go back up, back down, a little bull market price action, and back to the top of the trading range. So when we hear the media talking about new all-time highs, those that are in the YouTube here or in the green room, we know that what we hear in the media is maybe not what should be paid attention to as far as let's call it good information. But just point that out that this market this year, the latter part of the year, has just been in a trading range environment from here to here. Actually, from about just looking back here on the weekly chart from May, we're sideways, little advance down, little advance down. Whereas, at the beginning of the year was a nice advance, more controlled. You can see the moving average sloped up as it should be, whereas over here, it starts flattening out. And so being at new all-time highs, yes, it's bullish, but overall, what have we been dealing with here over the last several months? Wide, whippy trading range. NASDAQ, define that. Our trading range here. I like this tool. And so that's been going on there since November. A nice little advance like we saw there. And then, this is not a continuous contract, but, you could see what I mean. If I do that, I go to the continuous contract. And there we go. There's a little mess that I usually have on my chart. Let's duplicate that and drag that up there. And maybe for good measure, maybe tomorrow, the Qs can push up there. We'll see. Got rejected a couple of days ago after that advance, but you can see the range, the advance prior, and so on. Whatever we do next year, the markets do. We'll just tag along for whatever it is. The way this advance, the strength of this advance suggests a continuation. I'm not so sure at the beginning of the year how far it would get. And look at our internals last night. You can see we kind of poked over yesterday from what we looked at yesterday morning, but just kind of tagging that the bottom part of the two bands there, but hit the 8.0 area. So some little more upside, if that's in the cards there, should push this up. And in the beginning of the year, we're going to see some more corrective price action, which, this advance turned into some wide, whippy corrective price action. So overall, we discussed this over the last couple of weeks that, on the weekly time frame, it's just been red, green, what we call a Christmas tree type of pattern of, just going flipping back and forth. Mike, it's a good question because wide, whippy stage 3 is depicted by this kind of price action. But ultimately, it's always in hindsight that we know it's a stage 3 because it's got to break down. It's got to turn. It's got to break to a downtrend. And so over here, where it violated our major support point, the low prior to the higher high, it violated the uptrend here. All right. So now on the daily time frame, we know it's no longer an uptrend. It's not in a downtrend yet. So what's it going to do? And as we look at the weekly time frame, you say, well, the weekly's in an uptrend. And the 50 MA tells us that because it's the 10 on the weekly. Just for those that aren't aware, our past discussions as to what we call intelligent moving averages, the 20 on the weekly is equal to the 100 on the daily, which is down here. Right? But if we were to put a 10 on here, you see, this is sloping up. And we just know that major support is down here because this is a momentum move. So this is in an uptrend. So a stage 3 here does not mean, well, first of all, it's got to break down, but it doesn't necessarily mean that we're into a bear market. It just means we're in a corrective period, right? So back up a little. Our intelligent moving averages, and if we just were to take the prices off, and then we would say the 20 is the daily trend. Well, it flattened out. The 20, the weekly is still up. The monthly is still up. So even though this violates the trend on the daily time frame, this corrective process could be a buying opportunity because our higher time frames are bullish. So we've got this uptrend, and the next part of our systematic thought process is, which encompasses, retracements within a trend, is that the bullish scenario will result in a corrective process that stays in the upper half of this move. And so even if we were to get some whip to the downside today and tomorrow, that's all within the context of what preceded it, which was this bullish price action. So when you say, is it a stage 3, which the question is really, are we in a top type of a pattern? We're not going to know until after the fact. So right now we're just dealing with what this is in the short term, an extended move higher that needs to correct itself. And how it does that is either sideways, which is more bullish, than down. And if it's down, as long as it doesn't go too far down, right, that's still going to be bullish. And so the bottom of the range is here, and it shouldn't come all the way back down here. And that's the takeaway from, the simplicity of this analysis. And it's as concrete as you're going to get as to an answer as what's going to happen in the future, without us getting into market internals and yield curves and into market analysis and so on. But so far, uptrend, sideways trend, monthly's in an uptrend. It's just slop, which equals uncertainty. Call it Omicron, Corona, boats floating around with stuff that, is pushing up inflation and all of that. You've got this uncertainty, but has not been defined as to a certainty as to, is it resolved or not, right? So resolved, as we continue the uptrend, we've got Fed raising interest rates going into next year that'll be dealt with. And while that historically the first time or two does not produce a bear market, it does produce whipsaws and corrective price action. So we're not done with the fun of the whipsaws by far. And, we've got the, breakout that came all the way back down, smaller trading range. And we've got, let's look at it this way, makes it clearer. And, we've got this breakout failure. And now back into the trading range where the failure occurred here, and for the moment, a smaller trading range at the bottom of the bigger trading range. And so the question becomes, hey, is this something that is going to precede something more ugly for small caps because the breakout failure, deep retracement, if it can't get up above here and stays down here, that opens up the door to bearish price action, that prices break down. So these are one of the things that we need to be on the lookout for going into the new year. Because once prices, look, breakout failure is bearish, right? It creates uncertainty. Now, this failed miserably. It didn't break out and come back into the top of the range. It went back down to the bottom of the range, what we call major support. At major support, buyers are supposed to show up regardless of the fact of the deep retracement, and they did. Now, if they can't get it much higher and it stays at the bottom of this power move, that begins to lead our bias to it can't go up, so it's going to go down. And we say that in the green room. Well, even from an intraday trading point of view, it was like, all right, it went down because it didn't go up. It's like, really, Greg? Hey, that's no kidding. Well, yeah, because when you look at this from the point of view of supply and demand and what others are thinking, which is what these charts communicate to us, is that, there are buyers down here. And look at the wide range bar, how they stepped up. And so imagine this is a wide range bar on the monthly. And just like we say, okay, if it's bearish, it stays in the bottom. All right. Well, now we got a wide range bar on the weekly. If it's bullish, it'll stay on the top in the upper half. Well, if it goes back down to the bottom of the wide range bar, those buyers lose control, and the selling, right? All of these people that were buying here that are holding these losses in his breakout are like, hey, this thing ain't working. It ain't coming back up. And now it comes back down here. And this will be one of our themes as to how does this play out in 2022? Because if it breaks down here, small caps are going to get crushed, because now you've got this humongous price void by this momentum move and this sideways correction through time, and then a breakdown. Small caps are going to get destroyed. So that won't be a positive for the markets. Yeah. We looked at the Dow. We looked at the S&Ps. So we do. Just consolidating up near the highs there. So this is bullish. Nice little sideways action and a breakout, and we'll see if that continues. And our reference point from yesterday wasn't violated. We just got an inside day there. So prices so far are consolidating. We're right at the top of the wide range bar, and that's bullish. You see how simple this is? I'm not saying the process, until you get down the process, maybe it doesn't seem so simple, but the struggle of indicators is gone. It's gone. It's about retracements and looking to the left, turns, what are the reactions to those turns, and then the price patterns, all of this in multiple time frames that provides us a bias. McGraw saying small caps supposed to go up in rising rate environment plus January effect. Well, let's see if that plays out, McGraw, because if that's the case, right, we'll see how far they go, right? We'll see how far they go. And a rising interest rate environment, do we have that? Well, it's flattened out, but we've got the shorter term that's been rising in anticipation of those rising interest rates. So far, the 3-month has just been whipping like crazy, which is, are they really going to, raise rates? This is the 3-month yield, which, with the Fed, as they've announced, are going to raise interest rates. This thing should be starting to perk up a little bit, not whipping back and down. And now we look at the 30-year, and that broke down, and it's retracing back up to resistance. So, the 30-year coming down like this, the 5-year moving up like that, leads to a tightening yield curve. And I hear you, Mike. I mean, nobody believes Joe Biden, nobody believes the Fed, and that's part of this market uncertainty because, we've got people that we don't trust. And I mean, who's ever in the government, I guess we all approach that as maybe I trust them a little less than the other guy I didn't trust, but you know, anyway, our transports, which is a positive coming up here, but stalled. Same we covered yesterday. So there are positives and there are negatives, which lead to, hey, pick the best places, stay away from the uncertain places. And unfortunately, there's more uncertain places than certain places, because as we look at a very broad view of what's happening in the markets, these are the S&P 500 ETFs. We see whipsaws and trading ranges, and whipsaws just made a new high trading range, tech, which has been doing well, communications, up here. Put spread on transports, a put spread, I'll look at it, but you can see what's going on here. Healthcare looks like it'll continue to do well. Interest rate sensitive. If those interest rates start, which this looks good, interest rates start to perk higher, this is going to come down. Right? So staples, defensive, all of this is telling the story as to what's happening in the markets there. Trans IYT, it's so far away, McGraw, for a put spread. How about a call spread if there's some juice up here? Maybe a break under today's low. Like the whole idea with credit spreads, maybe it seems a little counterintuitive to fade strength or to fade weakness. For directional trades, that really doesn't make a whole lot of sense. But for credit spreads, the juice is percolating when it's going up there or down here. So ideally, you can get far enough away, to do a put spread or a call spread. It makes a lot of sense. XOP. I don't know. This is kind of just tightening up. Lower high, in the middle there. Kind of not sure which way that's going to go, but we, looking at crude oil, it's probably going to stall now that it's moved up there. So maybe a call spread, see where the juices are. XOP 90. Yeah, I mean, I would why do a spread? Sell it naked. If it comes down there, you own it and it'll probably bounce back up again. So, all right, all yours, Dan.
All right, good morning, everyone. 2 more days of the year trading, well, and of the whole year, since we have New Year's Eve on a Friday night. So all our opens are fine. We've started putting on a lot of call spreads. 1 second. But no, Joe, no, it's full day of trading, but we are going to shut the room at 1 o'clock. We'll have our own little half day holiday. All right, so we put on a lot of call spreads. Tesla was one. It's down. There was some news they're recalling $250,000, I mean, a 250,000 or even 350 cars. So, that's going to be a big bill for them. We did Netflix, we did Amazon, and they're all, fine. Even a little gap up against us here, it's going to be no problem because we're short the way out of the money, 3,600s. What are the odds of this pattern going to 3,600 in 2 trading days? Well, based on this pattern, I'd say less than 1%. So even gapping up here $7, the overnight time decay is gonna dwarf that $7 against us. Just glancing, so we have no problems here. So just holler if you have any questions on any opens. Not many earnings, but we'll see what I have here in my interest list. Bib, wow, I don't know what happened with that thing blasted yesterday. Look at that. And now, obviously, it looks news related, and then this is telling me that the news was not as good as what propelled it. Yeah, I was looking at that, Ken. I know Bitcoin's at 47,000 and change. You know, I was talking to my friend this morning about that. That you know, people that, like, I call them the cult, they just get something in their head, but it's subjective. You know, Scaramucci and so many others that get on CNBC. Oh yeah, it's going to 100,000 by the end of the year. Okay, so that's a belief. Now, when do you accept reality of you were wrong in that belief? And you know, that's part of trading too, right? And Greg says it all the time. It's like you bar by bar analysis, you know, forces you to accept reality and change your beliefs. And if you don't change your beliefs, then you know, you might not be in business for a while. Mister, you know, we've been selling puts and calls on this thing because the premiums are really jacked. And CNBC said today that they came out and said that they've been buying, you know, 1,200 more Bitcoins. And so, you know, it's up $1 here, which is meaningless. But you know, if this is rounding bottom here on the 15, it might be a day trade. It's not a good setup right here for put or call spread, but you know, it's one of our go-tos. This thing blasted the other day. It's blasting again pre-market. Same with this thing. No pattern though. Looks like a day trader toy. MU has been on fire, bullish. This was an earnings gap. They had some news that they're gonna have a, you know, inventory shortage based on China shutting down a plant or city or whatever. JetBlue said they're cutting 1,200 flights out of their schedule, staffing problems. No pattern there. All the airlines pulled in a little bit yesterday. You know, we just sent out our weekly trade review email, and this was in the email because explaining, you know, the beautiful retest W pattern in the day that we got into these things on bad news. So it was Jets, and we're still in it. We're still in it. CCL, we're still in it. Look, we entered on this gap negated on a higher low W pattern. So we're out of a third, and you know, stops under $20. We're still in this thing. And then we did hotel. So we actually had 3 of them in there. So hotel, same thing. This gap breakout from the turn. And we're gonna have to do an MT live. I think I got this on the schedule. And this would be a good example of the turn. And then, you know, you had a gap negated and then a gap breakout. And so we took our profits in the short put yesterday. And on the afternoon breakdown, we sold them out of the money call spread or naked calls or call spread, whatever it was. Yeah, spread, $10 white spread for January. Diddy here, Chinese stock, this was the one threatened delisting and all that, and had earnings or lack thereof. This is one nasty, steady selling. Look at these bars. Every gap, every green bar negated, lower lows, lower highs. Look at this. Look at the 20 MA when it's just parallel like that, parallel and steeping. That's ugly selling. Bottom right here. Somebody asked about this yesterday, and it's a wide range breakout of a bottoming pattern, but I saw it in the close and you need a pullback. I'm watching this AMC. It's kind of the flavor of an inverse head and shoulders. The shoulders are not perfect, but it's the same flavor of it, right? We had momentum move down, deep retracement, and it's getting its sea legs back here. Look at all these tails. So buyers are stepping up, creating support with these tails. I'm going to set an alarm, just eyeballing it up here, right? 28.75. Right, Inspector? He's back to being detective, Greg. I told him he had to take a week off for not finding the MT Live link. All right, so alarm 28.75. Hey, have the Reddit boys been active? Has anybody been watching the Reddit boys? So whenever I look at AMC, I look at GME. And so GME looks, it's a retest pattern, retest bottoming. So this is a definite put spread watch. I would love to do one DTE. Let's see. I'll put it in a window. Keep an eye on them. Greg mentioned Citigroup. I have an alarm, but that's a short under yesterday's low. AON, I posted this as a naked put, selling the 280s. Beautiful bottoming pattern. So look, it cracks me up when fundamental people say, oh, nobody can read charts, it's a coin flip, flip a coin and that's what you get. Well, really? Well, then how come we have 80-85% success rate? And example number 2, how come these bars all reversed in the same general area? Here, 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 here. That's support, that's buyers. So we're going to short the 280s way the heck down here. And, just another put play. Coincidence. Fake news. Y'all are funny. Q's selling off right here. AYI alarm, up alarm. Greg, we have a full lot of this thing. This came from one of you all in the green room, and I loved it. 1, 2, 3, 2 inside bars. All right, so I say we sell a third right here at market open.
Sell
Okay.
half and put a stop under yesterday's low.
Okay.